Hello, this is Todd Sevier, the Director of Joy and Senior Loan Officer for the Otter Mortgage Team. Wanted to send a quick update on some of the top 10 items regarding USDA financing. We've been getting a lot of calls on this recently, and I thought it might be a good time for a primer for everybody out there. So number one, this is no money down financing. It's very similar to an FHA loan, except no money down, and actually the PMI rates are a little bit lower than they are on FHA, which is really nice as well. There are geographic restrictions. I included a link to the maps down below that you can check out. There's not an easy way to search it on MLS. I've got some printed out maps if you'd like to see that as well. Just reach out to me anytime. Just like FHA, seller concessions are allowed up to 6% of the purchase price. This is primary residence only. Credit scores down as low as 580. I actually thought for a long time in my career you needed a 640. That's not actually correct. We can go quite a bit lower than that if needed. The appraisal requirements are very similar to FHA, so if you have a property you think would not pass an FHA inspection, it would likely not pass with USDA either, but feel free to reach out and I can go through specific properties with you. The guidelines were changed this year as well, so you can now do manufactured homes. That didn't used to be the case unless they're brand new. Now, if it's built in the last 20 years, so 2006 or later, you can get into USDA financing. Debt ratio requirements are strict here, though. So unfortunately, your clients that might qualify for a $300,000 home with FHA may only qualify for, say, $250,000 with USDA. That's why we call this threading the needle to some degree, because it's tight debt ratio requirements on the bottom. And then secondarily, there are also income caps. Now, those income caps are pretty aggressive, up to almost $128,000 for a four-member family, and up to $168,000 for 5+ members of the family. Finally, USDA does conduct their own review of the property after everything is clear to close, or a review of the loan file. So unlike almost anything else where clear to close is issued, that loan package goes out to the attorney. For USDA, clear to close is issued, that goes to USDA. So if you're setting up your calendar, scheduling that contract close date, I do suggest you add 2 or 3 days. As always, if you need anything at all, I'm here to help. Have a great one, and I'll talk to you soon. Thank you so much.